Hey everyone, Josh Vollmer here. Thanks for tuning into this March 2023 fertilizer market update. I want to kick off just by talking about the Russia-Ukraine war and its impact on the fertilizer market. And so if you look at this table that I put together, it shows where the price of fertilizer products were when the war broke out and then where they were 1 year later. So if you compare the left-hand column to the right-hand column, you can see that across every major fertilizer product, prices are substantially lower than they were when the war broke out. So one thing to keep in mind is that when the war did break out, prices were already pretty elevated. There had been a variety of factors that led to that, mainly weather, supply chain disruptions, and energy crises. And over the course of time, most of those issues have begun to resolve themselves. One thing that did get impacted majorly as a result of the war were natural gas prices and energy prices in general. So here's the European natural gas price chart. You can see a long-term trend. There you can see where we are today. And so prices today sit around $16 per MMBTU. So that's a little bit higher than it was within the last month. I think we got down to about $14 per MMBTU. But some weather concerns and some supply concerns over the last couple of days have led to prices coming up just ever so slightly. So even though prices are down off of their peak, it doesn't mean that Europe is quite out of the woods yet. You may have seen the announcement by BASF that they are permanently shuttering a portion of their Ludwigshafen production facility in Germany. And they cited the main reason being high energy costs. So if you look at where European energy costs are today and translating that to what ammonia costs would be, so at $16 per MMBTU, that gets you an ammonia cost in the low 500s. So if you factor in production costs, carbon tax, a couple other things, that puts you in the low $600 a metric ton for an efficient plant. So the falling cost curve on ammonia has impacted prices throughout the globe. Here you have the Tampa and the Midwest ammonia prices. Global prices do continue to fall as supply appears to be abundant. Midwest prices dropped another $100 recently, down to $750, give or take, at Midwest terminals. Moving on to urea, you can see that urea slide has generally remained in play. NOLA values remain in the low $300 per short ton range. Most recently, we had the India urea tender, pulled in 1.1 million metric tons of business that they ended up contracting for, slightly above the million tons that they were calling for. Regardless, that did not do anything to stabilize the market. Given the wide shipment window that India was calling for, it didn't lead to the product just leaving the market immediately. Here's a chart that just shows a little bit of the longer term trends at play in urea. So you can see there was a long-term trend line there, served as resistance and then support. We breached that at the beginning of the year. And now we are heading towards this long-term demand zone. So you can see it looks like urea has dipped its toe into the water. So the big question is, does it dive in or does it decide it does not want to go for a swim here? Before we move on to other fertilizer products, I just want to bring up the price of corn. And so the price of corn is about 35 cents off of its recent highs. And so a variety of factors have led to that, mainly supply in the world factoring into that. But this will affect some barter rates that we're going to look at as we go through. So just wanted to pop that up. So here is the corn urea barter rate in Cincinnati. You can see it's still at the lower end of its long-term range. Moving on, looking just at nitrogen content, working its way into the U.S. So January import numbers are now in. You can see that we're still way behind on the trade balance. And so this looks at all nitrogen types. So it doesn't break it out by product type. But the thing to remember is that if we are going to plant 93 million acres of corn, we're going to need some nitrogen. And so we're either not planting that many acres or we're going to need to draw some nitrogen tons into the U.S. Speaking of spring planting, here is a chart just showing the weather from January 1st until March 12th. And so you can see in the far eastern Corn Belt, one of the warmest winters on record. However, that warm weather does not seem to be in the forecast in the near term. So here's the 6 to day 10 forecast along with the 8 to 14 day forecast. So cooler weather on the way, which makes it pretty difficult to catch spring fever. Looking at UAN prices are off of their most recent lows. Prices are up maybe $5 to $10 higher, so not much, but the price bump did trigger a pretty healthy amount of liquidity and some short covering. Popping this chart back up, it shows two demand zones. So you can see the long-term demand zone that ran from 2016 to 2021, and then the demand zone that materialized since then. So you can see we came right down to the bottom of that demand zone hit the bottom, and then prices did come back up. The real question is, where do prices go from here? Ultimately, that's probably going to depend upon things like corn pricing, energy pricing, where the broader nitrogen complex goes, along with the amount of Russian vessels that are heading towards the U.S. So imports are going to be something that we'll be keeping a pretty close eye on as we move through the spring season. Here's the corn UAN barter chart. So we are right around average. So keep this chart in mind as we look at the next chart. So this chart basically translates that barter chart into percentiles. So looking at all of the prices on a monthly basis since the turn of the century, which is painful to say that it's 2023 now, but you can see that for most of 2022, we were in the upper 10%, really in the upper 5%, 1% of price ranges on a barter basis during much of that time frame. And so even today, as prices have come back down, we're still only approaching the mean on a corn barter rate ratio. Looking at nitrogen products overall, here is the cost per unit of nitrogen. Translated another way, this holds ammonia steady and looks at what the premium is for upgraded products. You can see that UAN is once again at a premium to ammonia now that ammonia has dropped another $100 in the Midwest. You can see that urea is still at a discount, an unusual discount, although it's been the case for much of 2022, that urea is at a discount to ammonia. Moving to sulfur prices have been fairly steady over the course of time. AMS prices have continued to slide, still looking for a bottom in that product line. Moving on to phosphates, we'll dig a little bit deeper into phosphates this month. And so dry phosphate barges have showed some recent weakness, although it's really occurring on some pretty light liquidity. So prices have been steady to lower over the past several weeks. And so this has put the U.S. at a discount to much of the world. So we are one of the cheapest markets in the world. Compare that to the September to December 2022 time range when we were the premium market in the world. Now we're one of the cheapest. So whether or not product stays in the U.S. or moves abroad, here is a chart looking at the price between Tampa and NOLA. You can see they're pretty much trading at parity overall, and so it doesn't favor one market or the other. U.S. is a net exporter of phosphate products, so this just shows where we are from a trade balance standpoint. One thing to keep in mind, so we are right on average basically at this point, but one thing to keep in mind is that the U.S. ended the fall season pretty much empty. You might remember there were some supply shortages throughout much of the fall season, so there was really no carryover buffer. So you've got this scenario where the trade balance is about even, you've got low inventory going into it. And then you factor this, and this is production tons. So if you look at production tons over the last several years in the U.S., and this is on a P2O5 basis, production tons have been steadily declining in the U.S., so substantially lower. And when you look at where we are in the 2023 fertilizer year, it's still ongoing, so I don't have that number in here. Our estimations would put that number about 10% lower than the 2022 figure. So you add all this together, you've got a trade balance that's equal, you've got low inventory and low production. So if we get anywhere back to historical application rates, and I know we were down 20, 30% last year, this could be a very snug market come the spring season. Looking at MAP and DAP prices combined, you can see that if you go back to last summer, MAP was trading at its historical premium to DAP, and you compare it to today. Now DAP is trading at a premium to MAP, and so very unusual, especially now we're at a $40 premium of DAP over MAP, and that's really because imports are down and U.S. domestic production continues to decline on DAP. If you go upriver, here's a chart just showing the MAP DAP spread in Cincinnati. So it almost matches the NOLA spread that you're seeing. And so keep in mind that we haven't seen DAP at a premium to MAP in about 5 years. So this is a major shift in the market and is pretty significant. Last thing on phosphates is ammonium polyphosphate. So 1034 prices are steady to softer, especially as we head into spring. These are Eastern Corn Belt prices. Western Corn Belt prices are substantially lower. I've seen it as low as $600 a short ton in the Western Corn Belt, and that's really because of different supply sources and the fact that the Western Corn Belt producers of superphosphoric acid did not have some of the production challenges or the firmness and tightness that you saw in the West. There's also some weather challenges in the Western Corn Belt that the Eastern Corn Belt does not see. Before moving on to potash, just want to show you the Anderson's newest product. It's Micromark DG Humic, and so we are pleased to introduce this product. It uses a dispersing granule technology, which allows for easy blending with your dry fertilizer blends. It contains a unique blend of calcium, sulfur, manganese, and zinc, and also includes humic acid. Initial trials have been pretty impressive. They've showed substantially higher yield gains than 5 of the top dry granular competitors. So please talk to your Anderson's territory manager today about how to trial this product or incorporate it into your 2023 fertility program. Finally, let's wrap up with potash. Potash prices continue to see some negative momentum. Since peaking at approximately $800 a short ton back in April of 2022, prices have either held steady or dropped for 46 straight weeks. I just want to point out how close we are getting to the 2021 spring season. And I just want to point out that there are a lot of factors that led to the price being where it is today versus where it was then. And so you go back, we first saw potash move out of its multi-year low on South American weather concerns. So the corn prices started to go up, got through the spring season in 2021. You had Belarus pull a dissident journalist out of the sky. From a plane, you had Mosaic's K1 and K2 mine floods. So prices surged right after the summer fill program there in 2021. We got into the fall season. Prices on grains were still strong, and there was really limited availability. So prices continue to surge. Just when we thought they were coming down, you look at number 5 there, the Russia-Ukraine war broke out, and that's when potash reached its peak. And now it's been in a steady decline almost since then. And so here we are. We are now producing somewhere between 5 and 7 million fewer tons of potash right now than we were back during that 2021 spring season. So pretty substantial. And so long way of saying potash is getting pretty cheap relative to the fundamentals. Here's the barter rate on potash. You can see it's well below the average barter rate. Here is a chart showing the Corn Belt potash premium to NOLA. And so you can start to see that that spread is starting to narrow. And it's mainly because NOLA prices have held stable for the most part, while Midwest Corn Belt prices have continued to drop. And so we're seeing about a $55 premium today. Historical value would be about $40, so narrowing in on that. And then finally, the last chart is the U.S. NOLA potash premium or discount to Brazil. So U.S. is trading at a discount to Brazil, which would send those tons towards Brazil. I think Brazilian buyers have maybe backed off a little bit. Safrinha crop is now getting planted, and so it's going to be a little bit of time before they really need product going forward. So that's all I have. You might have noticed also that we've moved our video over to YouTube, so feel free to subscribe to get notification when additional videos come out. So thanks so much for tuning in. Hope to catch up with you next month. Thanks.